Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is trading at $58,525. Bitcoin is now slightly down about 0.6% over the past 24 hours. The CoinDesk Ether price ETX index is trading at $4,264. ETH also taking a step back, 1.4% for the day. The new DFX CoinDesk DeFi index is at 564 points, though DeFi is doing pretty well in comparison, up about almost 2% for the past 24 hours. And joining us now to discuss the crypto markets is Jeff Dorman, Chief Investment Officer at Arca, an investment firm with over $500 million in assets under management. Welcome, Jeff, to the show. So El Salvador just made a huge announcement, this Bitcoin city that they're going to build, though it doesn't seem to have much moved the price of Bitcoin at all. In fact, Bitcoin is now a bit negative. DeFi is going up.
Yeah, I mean, El Salvador is clearly turning themselves into a powerhouse in Bitcoin, but we have to remember the absolute dollars involved in everything that El Salvador has done to date has been pretty meaningless relative to the size of Bitcoin. I mean, the Bitcoin ETF generated 1.3 billion of new demand in 3 days. A $500 million bond or anything to date that El Salvador has done really isn't all that material in the grander scheme of how large Bitcoin is and how much money has to enter to really have an impact on Bitcoin.
Jeff, can you tell us a little bit about where inflation and just like the CPI is playing in Bitcoin's price? Because there's definitely a lot of controversy about this. How big a part of the Bitcoin narrative is inflation and consumer prices going up?
Sure. I mean, long term, I think Bitcoin is really just a call option, right? It's either worth basically nothing or it's probably worth $1 million per coin. And everything in between is just a path function in terms of probabilities of getting to one of those two extremes. So to be worth zero, a lot would have to go wrong. I think pretty much nobody at this point, other than a few people still living 10 years ago, really believes that's the outcome. So now we're just talking about what it takes to get Bitcoin to a $10 trillion asset or something in line with gold or something with the money supply. So inflation has been a large narrative, for a decade plus for Bitcoin. But each individual data point is not enough to send Bitcoin to that number overnight. I think what people are missing largely with the inflation number is this should have been expected and really was, right? And you can go back to 2008, 2009, when you come off of a depression and everything goes lower, when you strictly look at year over year comps, the numbers are going to be huge. So the 2009, 2010 CPI prints were massive as well, coming off a depression. 2020, we basically had a quick depression because of the pandemic. Every year over year comp is going to be exploding. If you look more at 2 year over 2 year comps, it's been a more gradual increase, which is truthfully exactly what the Federal Reserve was guiding towards, right? We've had 1% to 2% inflation for 2 decades. They want to push it to 2% to 3%. By definition, to get to 2% to 3%, you have to run hot for a few months. When you get into next year, middle of 2022, the year over year comps are going to get much tougher. The CPI prints are going to start to move down. And then all of a sudden that narrative will switch again from inflationary to disinflationary. So in my opinion, when you look at Bitcoin, anything that's inflationary is good for risk assets. You want to be in an inflationary boom, that quadrant of the economic landscape where inflation is rising moderately and you have strong economic growth. You don't want to be in a disinflationary buzz where inflation is going down and economic growth is going down. Right now, we're in the sweet spot, right? GDP growth has been good, corporate earnings have been good, and we're slowly, seeing moderate inflation, which is good for equities, it's good for house prices, and it's good for Bitcoin and other digital assets.
So in the meantime, Jeff, of course, the $0 or $1 million valuation is a while away, but we're seeing prices inch slowly down. Is there a threat that we might see massive deleveraging, such as liquidation of long positions in the near term? I mean, is the market worried about that right now?
I don't think you have seen the price moves in Bitcoin. I mean, when you have a show like you do and everyone's talking about Bitcoin day to day, sure, you can focus on every 5 or 10% move. But Bitcoin is now flat since May 1st, which means all of the gains for Bitcoin this year came in the first 4 months. I'm just talking about how the market is currently positioned with what's out there.
in terms of how much leverage there is currently in the market. Let's say very short term. Are we going to see some sort of? Do you expect, or do other people expect, some of these long positions that are currently in place for the short term to be liquidated?
I mean, you see that periodically, right? But each one of every time you see one of these fast moves down, like we saw in the middle of November and we saw a few days ago, you do see liquidations, right? We saw about $1 billion of liquidations over the last 72 hours, with the bulk of those coming from Bitcoin. That certainly shows offsides positioning. But every time we get one of those liquidation events, the market resets. Perpetual swap funding rates go back to close to zero. The open interest in futures starts to go down. The skew in the options market starts to reset. The market really isn't nearly as levered as it was back in, say, the middle of May peak, before we had almost $10 billion of liquidations and had a 40% peak to trough decline. A little bit of leverage here and there makes sense, right? First of all, the Bitcoin ETF that just got approved is a futures-based ETF, which means by definition you're using leverage when you purchase that. So right there, that causes a little bit of open interest to rise across the CME, which then spills down into other venues like Binance and Deribit and everywhere else. When that happens, it puts a high demand on cash, because you need cash collateral to trade in the futures market. So that puts lending rates going higher. That lending rates going higher spills into the DeFi market. So you really do have this trickle-down effect, just causing by one thing in terms of the Bitcoin ETF. And then if you get some of that retail momentum piling on top of that, then that's when you see the leverage explode to unsustainable levels. But we're not there yet, right? The basis is at 10%. It was at 40% back in May. Funding rates are 0.1%. They were at 0.1% back in May. So we're nowhere close to a level of real concern in terms of leverage traders.
Jeff, we got to wrap it there, but just quickly, because Arca has been raising a lot of money, a lot of assets under management now. What is your outlook for next year, and what are you focused on in the crypto markets?
Sure. We're really focused on other areas of the market besides Bitcoin. I mean, we've been strong advocates and consistent advocates that this is no longer an asset class, that this is now a technology that underpins all asset classes, which means that you're going to have digital assets that represent currencies, that represent commodities, that represent fixed income and equities, and eventually, real assets like real estate. What that means is you can't ever say anymore digital assets are up or down, because that would make no more sense than saying ETFs are up or down, right? The individual things inside the ETF is what matters. The same thing is now true of digital assets. So, for instance, what I was saying earlier is, over the last 6 months since May 1st, Bitcoin is basically flat. Over that same time period, DeFi is down 30 to 50%, while layer one protocols are up 300 to 400%, and gaming and NFTs are up, 500 to 1,000%. That's what we're going to continue to see in 2022 and beyond. We're going to see specialization and unique price reactions based on sector, based on theme, based on token type, that really have nothing to do with what you might see in an index that's 80% Bitcoin or Ethereum. So we're looking forward to investing in different pockets of growth, from gaming to NFTs to Web3 to structured products, where we think digital assets and ultimately blockchain-based technology is going to fuel the growth of these companies and projects.